Alright ji, Bismillahirrahmanirrahim, Assalamu alaikum, hello everyone, and this is Afzal Shad and we are back with another session of partnerships. So today we are going to discuss about the appropriation account. This is basically the second part of the partnerships. In the first video we have already discussed about the basics of the partnership versus sole trader and the differences between the financial statements of the sole trader versus the partnership. So if you haven't gone through the first lesson, you can check out from the description. I have given the link for that. So coming back to the appropriation account, today we will be discussing about the ingredients of the appropriation account, which consists of interest and capital, interest on drawings, partner salaries, super profit, and profit and loss sharing ratio. So these are the things which we have already discussed in brief, but we will now discuss it in a detail. So the very first, appropriation account. What is appropriation account? Appropriation account is an account which is created after the income statement and before the statement of financial position. So in the step 1, you create the income statement and you try to find out the net profit. At the second stage, you draft the appropriation account, and then at the end, at the third stage, you make up the statement of financial position. So appropriation account is the part of year-end financial statement, just like income statement and statement of financial position. And it shows the division of profit and loss between the partners. As we have discussed earlier, the appropriation account consists of all of the entries which are related to the partners only. Not specifically for the business, but specifically for the partners. And we will discuss those things in detail in the next sessions or so. So first is the loans from the partners. What is loan from the partner? As we've discussed in the previous session as well, that loan from the bank versus loan from the partner, it's not that different. You can get the loan from the bank and you have to pay the interest. Similarly, if some partner is giving you the loan, just like the bank accounts, you have to pay them back the amount of principal as well as the amount of interest. So the partners are behaving just like the banks whenever they are giving loans to the business. But one thing which is important is, in a partnership, we can borrow money from the partners, we can borrow money from the banks whenever there is an extra requirement of the finances. But whenever the money is borrowed for a fixed period of time from the partners, it is not called as a capital, but it is called as a liability, just like bank loan is a liability. So we have to differentiate between the partner capital and loan from the partner. Partner capital is the capital investment, equity investment, in which they are entitled for the share of profit. But loan from the partner is kind of a liability, is kind of a bank loan on which we have to pay the interest. So a loan from a partner is treated just like a loan from a bank, but it is not going to be added to the additional capital. Interest on such loan is an expense for the business and given to the partner from whom loan is acquired. So similarly, if you have got the loan from a bank, what do? You have to pay interest. Similarly, if you have got the loan from the partner, you have to pay the interest. This time the interest is not paid in cash. This time the interest is basically transferred to the capital account. You are just transferring the cash into the capital account and you are making just one entry by increasing their capital accounts. You say that we are transferring this amount of interest to the capital account of that partner in terms of the interest on loan. Then loan from the partners are the part of income statement as expense, not part of the appropriation account. So this is the only thing which is related to the partners. As we have discussed, that the partnership appropriation account consists of all of the entries that are related to the partners. But this is the only entry which is the loan from the partners, which is being taken from the bank. Just like taken from the bank, it's taken from the partners, but it is not included in the appropriation account. Why? Because whenever you are taking the loan from the bank, where you put that? You put that into and you are paying the interest on that. You are placing that interest as an expense. Similarly, if you have got a loan from the partner, you are placing that interest as an expense, just like you are placing the interest on loan from the bank as an expense in the income statement. And it is not going to be the part of appropriation account. So this one point, it's important that whenever you're taking the loan from the partners, it is going to be an expense in the income statement. It is not going to be the part of appropriation account, and it is going to be transferred to the capital account other than the cash. Then loan from the banks versus the partners, what is the difference? Whenever you are acquiring loan from the bank, the journal entry which you are passing is bank is debited and the loan from the bank is credited. Bank is debited. Why? Because the asset is increasing in the bank. You are taking the amount of the money in the bank account. That's why it is increasing. That's why it is debited. And the loan from the bank, the liability is increasing. That's why it is on the credit side. So bank account debit to the loan from the bank account is credit. And whenever you are paying back the loan, you simply reverse the entry and say that loan from the bank account debit, liability is decreasing, and bank account is credit, asset is decreasing as you are paying back the amount to the bank. Now, what's the difference between the loan from the bank and loan from the partner? When loan is obtained from a partner, coming back to when loan is obtained from the bank, you say that loan is basically bank account debit and loan from bank account is credited. But when you are getting the loan from the partner, bank account is debited, same, but rather than saying loan from the bank, you call it loan from the partner X account. Now, when you are returning the amount to the partner, what you do is you debit the loan from the partner X account. Why you debited the loan from the partner X account? In the previous entry, you have seen that the loan from partner X account was credited. Now you are debiting it because the liability is going to be decreased. So loan from partner X account is debited because the liability is decreasing. You are paying back the loan. In the perspective of the business, the liability is decreased. Then rather than sending the money directly to the bank account of the partner, what you do is you credit the partner's X account. You place the money into the capital account or into the current account of the partners. So whenever they want the money, they are going to withdraw that, and you are going to pass the entry of the withdrawal as and when they are going to withdraw the money out of their capital accounts. So remember this point, that rather than saying it bank account credit, you are going to mention partner X account credit. Next is the contents of the appropriation account. So we have already dealt with the loan from the partner account. That was a different thing. That's not part of the past papers most of the time, but sometimes as it's the part of the syllabus, he can ask you that some partner has given you a loan to the business, so you must know how to deal with that thing. Now coming to the contents of the appropriation account, how many things are going to be dealt in the appropriation account specifically? First one is the interest on capital. What is interest on capital? Like, the partnership may allow interest to be paid on capital investment. What do you mean by that? So if some partner has invested more amount into the business against the other partner, obviously the person who has invested more should be having a greater chunk of the profit, or should be having the greater chunk in perspective of the interest. So whenever some of the partners, if they agree that they are going to have an interest on the capital amounts, whatever they have invested in the business, so it is kind of an opportunity cost concept. So if they have invested that amount into this business, they could have invested the same amount into the bank, and if they have invested that amount into the bank, they must have got some interest on that as well. So rather than getting interest from the banks, they are getting interest from this business eventually. So that's the concept of interest on capital, and it is going to actually push the partners to invest more into the business. If they are going to invest more into the business, they are going to get a larger share of the interests as well, and at the end of the day, the business will be expanding more. So, but what is the impact of the interest on capital? It reduces the profit of the business. Obviously, in the perspective of the business, you are paying the interest to the partner, just like you were paying the interest to the banks. Similarly, right now, the business is paying interest to the partners. In the perspective of a business, it's an expense. So expenses reduces the profits, and in the perspective of a partner, it's a good thing because it is going to add up into their capital accounts. Then interest on drawings, the exact opposite thing to the interest on capital. So if the business is paying interest on capital, why not it should charge interest on drawings, so that partners should not withdraw more amount from the business. So in order to create a barrier on withdrawal, what you do is you place an interest on drawings. So it is obviously mutually agreed upon by the partners. So interest on drawings is a partnership may charge interest on drawings by the partners themselves. So whosoever is going to withdraw amount from the business, they are going to be charged with the interest rate. So interest on drawing, as it is said, it is an opposite to interest on capital. What is interest on drawings? Whenever the partner is going to withdraw the amount from the bank, business is going to charge interest to them. So for the business, it is going to be an income, right? And for the partners, it is going to be a bad thing because their capital account are going to be deducted in terms of interest on drawings. So in the perspective of a business, the profit is increased because interest on drawings is charged by the business to the partners. But in the perspective of the partners, interest on drawings is a negative thing because it is going to be charged from their capital accounts. Then partners' salary or partner salaries. If one or more than partners might be giving more time compared to the other partner. Let's suppose there are 3 partners. 2 of the partners are giving full time to the business, but one partner is doing job somewhere else and he is giving a part time or a weekends only to the business. So obviously those 2 partners who are giving more time to the business should be entitled for the salaries as well. So you have to pay salary, just like you are paying salary to the employees, you are paying salary to the partners who are giving more time. But that salary which you are giving to your employees is dealt in income statement. You have already mentioned salaries and wages in income statement of a sole trader, so you are going to mention that over there as well. But whenever you are talking about the salaries of the partners, as we said, appropriation account is dealing with all of the things related to the partners only. So partner salary is going to be dealt in appropriation account. Employee salary is going to be dealt in income statement. Partner salary is going to be dealt in appropriation account. So any partner who is managing the operations should have to get the salary from the business, and these salaries are dealt in appropriation account. Then the residual profit. So you have discussed 3 things now. One was interest on capital, second was interest on drawings, third is partner salaries. Now when you have dealt with all of these 3 things, whatever remaining amount is left in the business after charging or after getting, that's called as the residual profit or super profit. This residual profit is now been distributed amongst the partners according to their sharing ratios, right? So what is residual profit or super profit? The profit left after treating interest on capital, interest on drawings and partners salaries. Okay, so distribution of profit, how you distribute the profit, the residual profit as we have discussed. So once the super profit or residual profit is calculated, the remaining amount is distributed amongst the partners. As we have said, the ratio of distributing profit is always given in the question. For example, if there are 2 partners and the ratio can be 2:1. So if there is in the question, it is mentioned that the partners are going to distribute the residual profit in the ratio 2:1. What do we mean by that? So the partner A or the partner 1 is going to get the 2/3 share and the partner 2 will get 1/3 share of the super profit. So how would you calculate that? Third, 2:1 means 2 plus 1, the whole share is 3. 2:1 means first is going to get 2 out of 3, second is going to get 1 out of 3. So 2 out of 3 and 1 out of 3 share of the super profit. Now suppose a super profit, the amount of the super profit, whatever is left with you is the amount of residual profit is 15,000. Now you have to distribute this 15,000 to the 2 partners. The first partner is going to get the 2/3 share and the second partner is going to get the 1/3 share. So 2/3 multiplied by 15,000 and 1/3 multiplied by 15,000. 2/3 share is 10,000 and 1/3 share is 5,000. So partner 1 is going to get 10,000 in terms of the share of the profit and partner 2 is going to get 5,000 in terms of share of the profit. Now coming towards the appropriation account, let's have a quick example of that. There are 2 partners, partners naming Mr. Shibli and Mr. Sajjad. So when Mr. Shibli and Sajjad agreed to form a partnership, they decided few things. First thing was Shibli would contribute 50,000 as a fixed capital and Sajjad would contribute 100,000 as amount of capital. As you know, the capital are dealt in statement of financial position. It's not the part of the appropriation or income statements. So let's move on to the second part, which is interest on capital would run at 5% per annum. So how much interest on capital are you going to charge? So whatever amount of investment is, so Shibli have invested 50,000. So you are going to charge 5% of 50,000 and Sajjad has contributed 100,000. So you are going to charge 5% of 100,000 in terms of interest on capital. Third point is, since he would have the main responsibility for the business activities, Shibli would have a salary of 10,000, right? So Shibli, as he is giving more time to the business, is going to have a salary of 10,000 and Sajjad is not going to have any salary because he is not giving any time to the business. Then residual profit, whatever the profit left, was to be shared out equally between them. Equally means 1/2, 1/2, half for first, half for second. Neither of them would draw anything out of the business until their profit shares has been calculated. So nobody is going to withdraw any amount, so there is not going to be any drawings or interest on drawings because they haven't drawn anything yet. In the first year, they expect to make a business profit of 85,000. So the total amount of profit coming from the income statement, the net profit was 85,000. So he has already calculated the amount of net profit for you and he's going to ask you to prepare an appropriation account. So let's have a quick look at the profit and loss appropriation account. First thing, as he mentioned, profit for the year, the net profit for the year was 85,000 in point number 6. So first thing you mentioned is profit for the year 85,000, right? Second thing is interest on capital. So what was the amount of interest on capital? Point number 2 is telling you that the interest on capital would run at 5% per annum. So Shibli has contributed 50,000 and Sajjad has contributed 100,000. So 5% of 50,000 is 2,500. Then Sajjad has contributed 100,000. So 5% of 100,000 is 5,000. So total amount of interest on capital that is going to be deducted from the income statement is going to be deducted from the profit is going to be 7,500. Then salaries. So who is going to get the salary? Have a look at point number 3. So point number 3 says that Shibli is going to be having a salary of 10,000. So let's give a salary to Shibli 10,000. So as we say that interest on capital and salaries are going to reduce the profits, net profit of the business, because interest on capital is paid, it's an expense. Similarly, salary is an expense for the business. So both of the things are going to be deducted. Now at the end, after 85,000 minus interest on capital and minus interest on capital amount minus giving salary to the partner, whatever is left is called as the residual profit, 67,500. Remember, in this question we didn't had interest on drawings, as we know that there are total 4 ingredients to be dealt with. First ingredient is interest on capital, second is interest on drawings, third is salary, and fourth is the residual profit that is going to be distributed. Over here in this question there is no interest on drawings, so we have skipped that part. So you have got residual profit 67,500. Now what you need to do is you need to split up or distribute this residual profit or super profit. What is the ratio given? In point number 4, he says that the residual profit was to be shared out equally between them. So the ratio is going to be half. So share of profit for Shibli is going to be 67,500, whatever is left. So remember, we had only 67,500 with us. So this 67,500 was distributed in Shibli as a half of 67,500, and then half of 67,500 for Sajjad, 33,750, and this amount was splitted between both of the partners, right? So just for the sake of a question, suppose if point number 4 was other than residual profit was to be shared out equally, let's suppose if we said that the ratio was 2:1, then for Shibli what you have done is 67,500 multiply by, rather than saying 1/2, you were saying 2/3 because the ratio was 2:1, and then for Sajjad it is going to be 1/3 because it was 2:1 in total, as we have discussed in the previous slide. So the ratios can change, you know how to deal with the ratios, and rest of the things are in front of you. Now suppose point number 5 now states that Shibli and Sajjad withdrew. So as we have discussed that in the previous slide, there was nothing related to the drawings. So right now we are saying, let's suppose Shibli and Sajjad withdrew 2,000 and 3,000 from the business, and it was decided that 5% interest on drawings is going to be charged by the business from the partners. So interest on drawings, you know, it is always an income for the business. So business normally charges that from the persons who are getting the amount, who are taking the loan from the business, so from profit. Now the question is, what do you think? Should we subtract or add interest on drawings? As we know, interest on drawing is charged from the partners. So for a business, it's an income. So for incomes are normally added to the profits. So interest on drawing is added to the profit. It is like business is giving loan to the partners and in return earning interest from them. So this is the important point. So interest on capital was your expense, so interest on drawings is your earning. Now how will we deal with this question? So rest of the points remaining the same, profit for the year, interest on capital, these are the same things. Now new thing is interest on drawings. So he says the drawings amount for Shibli was 2,000 and the amount for drawing from Sajjad was 3,000. So you are going to calculate 5% of 2,000 for Shibli and 5% on 3,000 for Sajjad. So for Shibli 2,000 multiplied by 5%, that is 100. Similarly 3,000 multiplied by 5%, that is 150. So business has got 250 in total in terms of interest on drawings. So it is going to be added. Remember this is the only thing which is going to be added in profit and loss appropriation account, that is interest on drawings. The rest of things are deducted. Then rest of the things remaining the same. Shibli got the salary of 10,000, and now you see that the amount of residual profit is changed. Previously it was 67,500, right now it is 67,750. Why is this changed? Because of the interest on drawings, additional 250 which we have got in terms of interest on drawings. So now the profit is increased by 250. So now rather than splitting up 67,500, you have to split 67,750 between the two partners. So remember this, 67,500 multiplied by 1/2 and 67,500 multiplied by 1/2. So it's simple. So rather than saying 67,500, whatever the calculation amount is, you just split up between the two partners. That's how we deal with the interest on drawings. Now, as you know that the appropriation account format is, let's have a quick overview on that. First thing is profit of the year. So you have to start from profit, whatever the profit, net profit, either calculated by yourself from income statement or it has been given in the question already. So the net profit, you start profit and loss appropriation account with the figure of net profit, that is 85,000. It was in 85,000 in our case. Second thing is interest on capital, that from the profit, the first thing which you are going to do is deduct interest on capital. Then third thing is add interest on drawings. Fourth thing is less salary, and fifth thing is less share of profit, means residual profit is going to split up according to the profit and loss sharing ratio. So how many ingredients are there? Profit minus interest on capital plus interest on drawings minus salary minus share of profit. So in total there are 5 ingredients: profit and 4 adjustments. Profit and 4 adjustments, and 4 adjustments are interest on capital, interest on drawing, salary and share of profit. These are the only 4 things that are going to be adjusted in the profit and loss appropriation account. Normally there isn't anything else given in the question. The first point was profit of the year, second interest on capital, third interest on drawing were added, salary was deducted, share of profit was deducted. That was a quick overview of on the appropriation account. So after this lecture, obviously you have to get the worksheets from the afzalshad.com. It is available over there. Then if you're unable to find it, you can contact me anytime, and I will share the link with you as well. Plus I will share the link of the worksheet in the description as well. Then obviously this is the second part of the partnership. There is still one part of the partnership remaining for the IGCSEs and O levels, which is capital current account thing, which we call it as a fixed capital and fluctuating capital. That's still remaining in the next video. And then once you are done with all of the topics, or once you are done with the complete topic, you can have the topicals, the games of accounting season 1, which has been updated every year, as I have mentioned in the previous video as well. So you can have that from the website, plus you can order that from the website anytime you want. So in the previous video we have discussed about the types of business organization, advantage, disadvantage, partnership agreement and difference in the financial statements. Now what's next? After this video, fixed capital, fluctuating capital and some questions from the past papers. We are going to discuss fixed capital account, the current account versus the capital account in detail, then fluctuating capital, and we are going to solve some of the questions from the past papers or from the exercise. So thank you very much for your time again. So if you like this video, you have to subscribe us if you haven't done it. If you like this video, just click on a like and do comment that what thing needs to be improved, or if you want to have a specific lesson on some specific topic related to the accounting or business studies of any class, you can comment and I am going to add that lesson into as and when I can add that as soon as possible. Thank you very much for your time. This was Afzal Shad. Sign